All right, all right, all right. What do we got? It's about 10 to 6, and I've been watching the futures. I saw them way down, way down into the 60s, and now we're about 56, and it's Europe that's taking the beating. And these guys are flying off the hook over this Omicron. Yeah, people aren't too into vaccinating over there, and a lot of people getting sick, and that's all they're talking about: people getting sick. They're not talking about hospitalizations or anything like that. And it seems like there being a bunch of prima donnas over there trying to encourage people to be vaccinated. So they're overreacting, I feel, and I think this sell-off is. I think the market's going to come back into the open, I think, and these are rough predictions. I mean, technically, that feeling is not founded in anything, but just my impression. So, so that's what's going on over there. Now, Moderna came out and said that the third shot, I think, improves your immunity 35 times or something like that. So, I mean, we have a remedy here, or at least a management plan. And I think that the U.S. market is going to do a little better than the European market did today, because people have to see that we have a remedy, or a risk management plan on this. So the question is, do institutions and algorithms feed into this negativity? Or do they pick up a buy-in at the open, and and that generates more buying from algorithms? So this is the question. I mean, long term, I think this is a great place to buy, and buy what you like. The other thing you have to consider is Munchen. I believe is how it's pronounced. Squashed the buyback or Build Back Better plan. Squashed Biden's plan, and that's a drag on gross domestic product a little bit, but it's going to it may keep the FOMC from raising interest rates at the first meeting that they can possibly do it, which I think the first interest rate was expected in March, and I would expect that they may hold off in March. So this is good for tech. I mean, everything that got slammed over the past week in tech because they're interest rate sensitive, I think you're going to see a buy-in on that based on this information. And it doesn't look like they're going to get this plan done before the end of the year, obviously. It looks like it's a total wrap. So they're definitely going back to the drawing board. And, Munchin, who is a Democrat, doesn't but a conservative Democrat, because he's from West Virginia. He doesn't like the price tag on it, and he doesn't want to stick the American public with that price tag. He doesn't see the benefit in it. Although he's archaic too. I mean, he's a dinosaur, and he may not understand what the build back is. But I guess nobody really does, because they're playing close to the vest on the whole thing. So so that being said, I mean, the gross domestic product is probably going to get hit a little bit. I think Morgan Stanley came out and downgraded it already from like 3% growth next year to 2% growth. Um, but by the same token, that's going to have a dramatic effect on the FOMC and raising interest rates down the road. Coupled with this Omicron, I don't see it, man. So, as far as trading this week, it's very iffy. But I'll tell you what, start positioning yourself for 2 or 3 months down the road. And I think you're going to do very, very well. So go after the techs that you like and things like that. Anything that got beat up because they were interest rate sensitive. And I would look at opening plays, because I don't think that the economy is taking this much of a beating. I'd look at cruise lines and stuff like that. Airlines are going to take a little bit of a beating because it's very immediate, and people are going to cancel trips that are happening right now. But I think people are going to be looking to the future to book their cruise lines and their cruise ships. And I think that eventually they're going to have to start talking about the fact that this is a very mild symptom strand of Omicron, and that's going to bring the market back. This may be, like we open up kind of low, take a nice dip, probably repeat the lows of the markets, which is probably 15 or 20 points from here, repeat the lows of the future, and then turn around and trade back up. And it's going to be a hell of a gap. So if we do get that upward momentum, then I would expect a gap fill by the end of the day. And if you look at it historically, today's the day for the Christmas rally. If you bought on the 21st or after, you historically did very well in the market, as opposed to buying before the 21st. So based on that and all of the astrology type traders, I'll bet that I don't know. I just see it coming in. I mean, if we look at the technicals, things are looking kind of beastie. Let's take a quick look right here. Here's our 240, and I'm looking at the futures right now. And this 240 is building a really nice hammer. So I think we start trading up into the open of the market at this point. We still have 5 minutes, and we'll check back on that at the end of this and see if this is what the 240 still looks like. So the 240 looks like it's building a hammer. And let's just look at the weekly. Herein is the biggest issue. You have a bearish divergence on the weekly, and that's pretty subjective. So the bottom low, right, 485.25. So anyway, you get this divergence, and what it's telling you is this uptrend is coming to an end, right? So it doesn't necessarily mean that it's a reversal. It could go into consolidation for a little while, right? So really what we want to watch is make sure that we don't break this low of 485.25. And this is on the futures, so the numbers are off, and we'll look at it again on the S&P. So if we don't break this low right here, we're looking good. We go into consolidation, and then we may have the opportunity to turn around. But this is definitely telling us that this trend is over. So we could look for a consolidation for a week or two, and then maybe a move up. And I mean, it's not impossible that we continue the move up. We do have a higher high here. This is a higher low. If we close up today and then move up tomorrow, this is a higher low, and this can begin a trend up again. That could be the extent of the consolidation, or we can consolidate it here. So we have to wait for the trigger. So we would turn bearish on the market on a break of 743.25. We would turn bullish on the market. I'm sorry, dyslexic bastard. At 743.25, and we would turn bearish on the market at a break of 485.25, again on the S&P. So if we look at the 60-minute ES, which is the S&P future, we could see that hammer already triggered, and we're getting that push off. We'd see a roll around of the momentum. So we're definitely, I guess definitely is a strong word, but I certainly feel that we're going to close or open the market a lot closer than we are right now. And right now, I believe we're looking at, we're down 56 or so. So yeah, these close numbers you can't go by because it takes it from a different time, just based on my settings. So if you look at the market real time, you'll see we're down like about 56. So let's jump over and look at the SPX. And here's the SPX on the weekly. And it too is demonstrating that, that divergence. And you can see it right here. I know that pop-up's a pain in the ass, but here is here's the high. It's not really a divergence actually on the S&P. It's kind of a trend reversal. You have a high, a low, a high, and a lower high rather, and the market's moving down. So again, it is dictating that it could go into a consolidation here. The reversal or the divergence is a little more apparent on the futures market, but on the weekly you could see a trend reversal. And the fact that we didn't make another high can infer that we're going into consolidation with the momentum dropping off right here. So we're going to have to see what transpires today and how we close. I mean, yeah, we're going to have to watch today. Anything could happen. So we just started. I told you, yeah, if we end up closing up today and make a green bar, that's a bearish finger right there, which kind of infers that they put the push on the move down. It couldn't hold, and that's a good indication that we would move back up. But I mean, I'd be neutral with a bearish bias on SPS. I would go bearish if we broke the weekly lows. Actually, I would turn bearish if we broke the 495. That would be my bearish indication. And then we have quite a move down. I'd say 4,400 would be the next move, and then you're looking at 369. So vicarious time. We just have to see how it turns out. But I like the look of the trading pattern on the futures much better. Definitely a better indication of what's going on. Markets are moving a little bit slow right now. Moderna came out, made that announcement. We got a little buyback. Yeah, a little spike in the Moderna news. I don't know. I think we're going to get a good vibe in the morning. So keep your eye out for that. But this is definitely a buy on dips situation. Yeah, and again, you could start looking at tech again because I think that they're going to hold off on raising interest rates in the FOMC and things of that nature. So anyway, remember, calm and cool when you're trading. You should be at peace when you're trading, and good luck trading. Oh, by the way, hit the like, hit the subscribe, hit the bell, and good luck.